Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. I'm trying to be a little bit quiet because I'm still cooling off my room. I have the door open. But we had a Federal Reserve meeting yesterday, and I'm expecting a little bit more activity today. Problem is, Donald Trump is going to announce a trade deal. Rumor has it it's going to be with the UK. So I'm concerned that trade might be a little bit difficult for us today, and that what is normally a good trading day for us is kind of being stolen from me. Let's come over to the charts, take a look at what we're looking at here. So here's the treasuries, and after the Federal Reserve meeting, we fared okay. I mean, there was like a spike there at the start of the press conference, and then they kind of gave up those gains. And in the overnight action, it has been selling, but a little bit of a steepening in the spread, which is also kind of curious. S&P 500, well, I don't know. Wait, I wonder if my data's messed up there, because there's a big gap overnight, the jump there. I don't know about that one. Oil's kind of doing some ziggy-zaggy stuff now. Gold. Alright, again, yesterday they kind of took a little bit of a hit. Silver. Copper. Copper not looking so hot there. They're going to break down again. Japanese yen kind of just holding, and Bitcoin zigzagging back and forth between 97 and 94,000. So in 5 minutes, we do get some numbers. Let's see here. What are we expecting? U.S. initial jobless claims, previous reading 241K, expected number 230K. Let's see if it's higher or lower. Kind of seems to me that what is going on is a lot of people held back some economic activity because they were concerned about the effects of tariffs. It did kind of all go crazy there, but Trump kind of backtracked a little bit, and companies, whatever tariffs have gone into effect, companies have kind of eaten. And so I don't really think that companies or the consumer have really felt the impact of tariffs yet. It may be the case that that companies all just kind of eat it and slowly give it to the consumer, and so you're not going to see it just all at once, everything's more expensive sort of a thing. And maybe before any of that stuff happens, they've made deals with everybody and sorted it all out. I can only hope. But, that's what we're kind of looking at. The Federal Reserve is like, well, we can just wait. The thing that I think is kind of interesting about this whole situation is that the scenarios that I see people drawing out, they'll have a scenario that is somewhat reasonable, but then they will be dead wrong on how the Federal Reserve would react to that situation. And I'm seeing it from hyper-political people on both sides of the aisle. So on one side, there are Democrats, and Democrats want interest rates to stay high. because they know that it would hurt Donald Trump. They want interest rates to stay high. And so they think that tariffs are going to create lots of inflation and a recession. And ergo, they want the Federal Reserve to raise rates. The problem is that in that scenario, Federal Reserve is likely to cut rates. Why is that? Well, so Jerome Powell laid out in the meeting yesterday, like, how would they respond if their dual mandate of maximum employment and maximum price stability come into conflict with each other? And how would they do that? And he say that they would look at how far each of those goals are from their mandate and how long it would take to fix them. And essentially, they would go and fix the issue that was a bigger deal at that time, right? So if we're having inflation, and right now economists expect inflation to be run at like 3% year over year, okay? So if we get inflation at 3%, but we go into a recession, a recession is probably a lot farther away from maximum employment than 3% inflation is from 2%. So in that case, the Federal Reserve would probably cut rates to support the economy. Now, the other scenario, the one that Republicans want, is that we have tariffs, that prices don't change at all. Maybe they go up. Some I think the delusional ones think that nothing will change at all, but I think most smart Republicans understand that there will be some price increases from tariffs, because the whole thing is that they've been selling us these goods that are cheaper than they should be because we're practically using slave labor, right? Okay. But because of trade deals and tax cuts and other things that the Trump administration is doing, that the economy moves along just fine and actually does kind of well. So in that scenario, I don't necessarily see the Federal Reserve cutting interest rates. I do think that what we're looking at, that the Federal Reserve does cut in July, and the probabilities when I looked at it last night was 60% chance that they cut in July. Okay. But that's kind of like the baseline scenario that like most economists are expecting. The scenario that Republicans want, probably the Federal Reserve says, oh, actually the economy is too strong and we don't need to do anything. Okay, so here we're getting the number. Why is it not showing me here? Oh, 228. So slightly lower than expected. But that's good. That's good. I think, yeah, the treasuries are selling a little bit off of that. Treasuries are selling a little bit off of that. All right. Now, another thing that I am seeing in the treasury market right now is that there are more speculators out there that want to go short the treasuries. Like, especially you go out there on Reddit and everything. These guys all have these doomsday scenarios about how, you know, interest rates are just going to skyrocket. And it's one of those things where what I'm seeing is heavy option puts, yeah. Like, I think what happened was because the treasuries were selling super hard at that time, and that got a lot of attention on social media. And when that happens, you get a lot of people that take a trade in line with that move. So you ended up with a lot of people going short in that time. Or if they weren't, like, if they didn't actually put money on it, they have emotionally invested short in the treasuries at that time, right? And they're kind of sweating it out. They're kind of sweating it out because over the past week or two, it hasn't been short, has it? Meanwhile, whenever we have an auction or I kind of look at the things that indicate to me that like larger players were involved and things like that, over the past 2 weeks, they have all been long. And it's kind of been squeezing these retail traders out. So this is a dynamic that I think should continue to hold. And so when I'm looking at news right now, and all of the news is kind of coming in okay, I see more selling than I would expect off of that news. Fair enough. And then it's like when things get quiet is when it just like slowly creeps up. So I think that that's the way that we kind of have to play it right now. Is kind of avoid, if we want to go long the treasuries, we kind of have to avoid those speculators that are just absolutely convinced that treasuries are going to blow up. Now, I saw one theory I've seen from people is that because the dollar is going down, there are a lot of small countries that they hold large capital reserves, and they buy a lot of treasuries to give more confidence in their currency and hedge themselves and give them enough liquidity to do operations that they need to keep their currencies stable. And the problem is that if the value of the dollar goes down relative to everything else, then they're not hedged as well. And so they will have to buy even more dollars, essentially. And so the theory, and I don't know if I'm explaining it super well, but that's essentially the theory that I've heard. I don't know if that completely makes sense, but that's how some people are explaining why are the treasuries kind of been buying up right now. Like passive flows have been long. Okay. So that after this Federal Reserve meeting, that's kind of where I see the market right now. They are selling off of that jobless claims data. We do have CPI next week. And again, today, Donald Trump is expected to announce a trade deal. Well, he said they're going to announce a trade deal. It's going to be at 10 o'clock Eastern time. 12 o'clock my time, I guess. No. It is at 10 o'clock Eastern time, right?
Order submitted.
Yeah. So it'll be right when we have to leave, unfortunately. I must say this flow, so we've gotten a good 8,000 contracts short, but the activity level still is a little light. So I don't think I'm taking any trades today, guys. I don't know. So I was thinking about my content this morning and I was like, I don't know if my content has been very strategic. Because what's happened is, okay, first we went and we made the stuff that is like, what is the most important thing to know, essentially? That the markets are very statistically efficient, but not very informationally efficient. So if I think that the biggest opportunities are in informational inefficiency, then shouldn't my content be more centered around understanding the current market? And I think in the past that I haven't done that. Like, I don't make outright videos about that. One, because when I start making content about that sort of stuff, that doesn't seem to do that well. But then also it's very short-lived, right? And I want to make content that's kind of evergreen content. But then if you look at my content, you would kind of think that I think that the best opportunities are in algorithmic trading. But then at the same time, if you wanted to go down the algorithmic trading route, I don't really think that I have that much super detailed content about that. I should probably be digging heavier into machine learning concepts, right? Well, I'm kind of at a place where I can't really make any kind of content anyways, so it doesn't matter. But I kind of thought, here on the stream, especially at the beginning, I should really try to give a full accounting of where I think the market is at. So I think it did that. Pretty good. We are getting a little bit of mean reversion here now. CNN is reporting that the trade deal will leave a 10% tariff in place. If I like drifted, I feel like that the Okay, so this is coming from a CNN reporter on X. That's a little bit better. Yeah. I like this shirt, but I feel like it's too light in the camera. Well, is the S&P 500 saying they like that or they don't like that? I don't know. This is an interesting development though, because the whole thing is okay, that he's implementing really crazy tariffs, and they were kind of holding out 20% as the the best you're going to get is 20% because we do still want to provide people an incentive to bring their business back home, back to the United States. Now they're given 10%. So maybe that's better, but it's not zero, which is what people would want, right? So it does kind of seem to me that no matter what happens, that Trump is going to create a regime where there is a certain tariff amount. Okay, it's cooling down here a little bit. It's still not comfortable, but it is enough to make my feet cold, so I'm going to go put my shoes on, all right? Oh, yep, I'm sorry. I was muted. I was trying to figure out why I hear order canceled. And I think that that's like a limit order canceling, like the target canceling. But the algorithm didn't have a position on, so I don't... You can see it, but I can see it right here. That it flipped around. Why doesn't this screen show you a time? This is one of the things that drives me crazy, is that the windows that NinjaTrader gives you to work with to determine what happened are really terrible. I just crashed NinjaTrader by trying to right click on it. Can you believe that? Can you believe I just crashed NinjaTrader there? I had it open all day though, so I forgot to come in at the end of the day and close it down, so. My pinky toe doesn't feel right. I think that it's like getting crowded by wearing shoes every day and doesn't like it. So I'm probably going to be fidgeting all day about that. I guess I need to just find some nice work shoes that have a wider toe box. Clown shoes or something, I don't know. Clown shoes would be fitting. I can't remember the name of the... Is there a data feed you rec over others? I don't know what you mean by rec, but prefer over others? I prefer Rhythmic over CQG. Rhythmic gives you more level 2 data levels. It is easier to connect it up to multiple platforms. Often the version, I'm not going to say that all CQG data is bad, but the version of CQG data that most people are getting, which is Continuum through NinjaTrader, is not as good. It also doesn't give you as far back testing. I'm like finding a lot of people that they want to do back testing on NinjaTrader and they can only back test a year. I'm like, what? Yeah. You like the ticker? Yeah, I made that. That was a fun project. There's actually a problem with it. It doesn't display red correctly. Like something happened. One of the pins just didn't make a good connection. I tried multiple times to try and fix it, but it just wasn't working. The red on that doesn't quite work. But yeah, I basically got a Raspberry Pi with a hat from Adafruit, and I programmed the Python script to show the ticker. It's kind of funny because one of the things that I did then was I made a new or I got a new camera lens so that when I'm making my full videos, it's sharper and the background is a little bit more blurred. But then the consequence of that when we're live streaming is that you can't even see what's in the ticker anyways. So whatever. Thanks for inspiration for a new project. You know, I would like some inspiration for a new project. Let's see here. Adafruit is the best place to go for this stuff. Not that it's like the cheapest or anything like that, but they actually give you kits and ideas. USB-C power monitor. Cool. Why do they have a beefy rack panel? I haven't woodworked in a while. I was thinking of building the perfect trading desk. Highly subjective. Yeah, that is subjective. You know what? I built my desk and I just made a big flat desk and I just finished that piece of wood really, really well. And I think that was probably the best option. And it definitely improved things, man. Like, it is so much. I don't even know how I functioned before, because there was like no room on that desk. Now there's room. I can move things around. It's great. Have a woodworking project out there that I need to finish. I need to sand. That cabinet and paint it. But I'm kind of been putting it off because, well, I'd have to buy a new sander, I guess. I mean, I could borrow somebody's sander, but I feel like that I'd be doing enough projects that I should buy one. But then I'm like, oh, I want the nice $400 sander. Can I really justify a sander like that? NeoPixel aquarium. I think it would be cool to make something to go on my desk. The Bosch random orbital. He really thinks, I'm not familiar with that one. Isn't it BOSH? BOSCH. That's how you spelled it. Oh, yeah, I'm familiar with that one. I think it's this one. Oh, that's only $59. Yeah, my uncle has this one. But he has another one too. He has no, it wasn't the Roby. It was the DeWalt. And it wasn't this DeWalt. No, that's a weird DeWalt. This one right here. $84. I was thinking about getting this. Oh, you just like the brand. I was when my research all kind of said that there was something particular about this one that made it better than the other in its price point. But yes, I was looking at, what was I looking at? Oops. I think I was looking at a 3M. I think it was this one. Oh, let's go back to Home Depot. Maybe Amazon. They of course have more than one. Is it the extract? Well, I think it's this one. But it basically it has something about the way that it runs that, like, you know, like when you're sanding for a long time and it kind of messes with you and like might even make you handshake afterwards. And the something about the way that this one works like counteracts that, so that it's much better for you when using it for long periods of time. So there was that one, and then there was another one that is like some brand that I had never heard of before. Is it yeah, the Merca. GK. Yeah, that's it. Yeah, they have more than one. I'm not sure which one it was. I remember these being dark colored. Oh, they have a detail sander. I would kind of like that. Looks like 10 will test the FOMC price action. I don't know. It kind of doesn't feel like they're doing anything. Why? Well, do all traders have similar interests? How about music production? Yeah. I don't use Ableton Live. I use the Bitwig. Have you ever used Bitwig? Basically, the lead engineers for Ableton Live that were responsible for a lot of the most innovative features that Ableton did really didn't like some of the business decisions that were being made. And there was a lot of features that they really thought were important that would make a difference. So they broke off and made their own thing called Bitwig. And some of the features that you get with Bitwig are it can do both 32-bit and 64-bit plugins. Whereas in Ableton, you have to pick. Like, they can all be 32-bit or they can all be 64-bit, but you can't do half of them one and half of them the other. Plugins are run in like a container. So if your plugin crashes, it doesn't crash your whole project. And it has like a really, really amazing modular setup. Yeah, anyways, so like the whole thing was, when I was thinking about sander, is it was like, okay, I can get an $84 sander, or I can go and get the sander that I really want, like a $400 one. But then it's like, can I really justify a $400 one? I don't know. Well, for just this project, 84 bucks. Maybe I'll just go get the wall. But I don't think that that's like, do all traders have similar interests? I kind of feel like that music production is such a broad interest that a lot of people our age were just interested in it. One of the things that I find kind of frustrating is I'll get into something, and a lot of the time I am looking for something that is, really niche and not common, essentially. And then what happens is, over time, it becomes popular. Oh, okay. So I was looking for a shoe over here to give you an example. So I don't know if I really like the style of the shoe, but basically you get a toe box that looks different, and what happens is that kind of makes you look like a clown, I feel, even though it's much better suited to the shape of your foot. Hopefully I can flip the... Wait, music production is my full-time career. And trading is my hobby now, because music is a job. Oh, really? You really make enough from doing that for it to be a career, huh? TV theme songs and commercials? One of my things has been, I just get tired of having to promote yourself all the time. And on YouTube, it's like you're on your own. That's kind of how the game works. Can you really be super successful being a solopreneur anymore? I don't know. But in the music industry, I realized I'm not going to say pretty early on, but I got to a point where I was like, we're just being manipulated. Like, the whole thing is you want to put together a track that's just so awesome, and then you send it into some music label, and then the music label's going to promote you and all of this sort of stuff. And basically what happens is, one, it's super, super hard for a music label to even notice you. And then when you do get signed on, you don't make jack squat from doing it. Because you basically only get like royalties from people buying it, which is like a pittance. And then they don't actually promote you at all. So like they don't provide the thing that you're really even going to the music label for in the first place. That only happens if you get into like the best label. Like if it got signed to Anjuna Beats or something like that. But even then, I look at most of these guys that after they're done with their initial contract, they usually leave. So like, right? The whole music industry has turned into a complete sham. It is the music industry executives sucking everybody dry and not giving them anything in return. And it's absolutely crazy. It's absolutely crazy. And so at some point I was just like, you know what? Like, it doesn't really make sense to be like grinding or doing this thinking that I'm going to make money. So I just relaxed and I just make whatever I feel like and just relax. And only short Spotify, right? I know that the crazy thing is that I've seen some people that did become very rich from Spotify, but like the whole thing with Spotify is that the music industry again basically created a deal with Spotify so that they could have their music on there. But the deal essentially ensures that all of the money goes to the music execs rather than the artists, when they don't provide anything. It's just crazy, man. I think it's kind of weird to see like the music that is popping off right now and the things that become popular on TikTok and things like that, because it has this flavor of like, oh, see, everything is exactly the way that it was in the 2000s and 2010s. And it's just that it's all on, promotion is on TikTok and everybody listens on Spotify. But like when you go dig deeper, you find that there is like this rot that like everybody that's trying to go in and do this as a music career is struggling. And before long enough, people are going to figure it out that the entire business model over there fails. And then what are they going to do? So I was like, I'm going to stay away from that. I don't know. To some extent, when it comes to trading, to some extent, I kind of feel like, day trading definitely wasn't what I initially thought it was. Like, I knew that it was difficult. I knew that most people didn't succeed. I had been given some tips that basically helped me understand the nature of the market so that I didn't fall into some of the common traps. But I think the thing that I didn't expect was that even when I did well, that it wasn't going to be all that rewarding. Was kind of the thing that surprised me. And if I hadn't gone down the route of the YouTube, I do kind of wonder, like, when I spend as much time on the day trading, I would always be involved in the market. Like, that's the thing, is I just find the market so endlessly fascinating and interesting, and I want to learn as much about it as possible. And I feel that day trading kind of provides the greatest opportunity to learn about what's going on. And that's kind of like the primary reason why I do it, you know? But like, if I'm just trying to make money from a side hustle, you know, and that's kind of the issue is like, I'm totally fine doing the trading just for the joy of it. And, you know, maybe eventually an opportunity will come along where all of the knowledge that we have ends up really giving us an edge and we can make a big windfall from it. I think that that's kind of the long-term game, and I'm playing the long-term game. But you kind of need something to like keep the chemicals flowing, you know, like do something that provides feedback and gives you satisfaction. And it's like, it's just not out there. I feel like everywhere that you go, every kind of thing that you try and pick up where you know, you try and succeed at the thing and climb the hierarchy or whatever is a dead end. And that's really frustrating. Does the price ladder show trapped traders? I would say that it absolutely can. I would say that a situation where trapped traders like actively matters, like it really creates a real move, it's actually pretty rare. And even when that situation appears, it doesn't necessarily result in a big move, because the future market orders is what really matters. And if somebody's got this huge meta order short, then yeah, it doesn't matter what these guys did or whatever. So it's not something that I would recommend spending an inordinate amount of focus. I think that it's often presented as like, this should be your trade. Just only look for trap traders. I don't think that works very well. What is your method? Well, I'm looking for any kind of a flow that I can potentially predict. So I'm not really focused as much on, you know, what is the current market condition or this setup. So we were talking about this a little bit yesterday, but let me try and like go into this in a little bit more detail, okay? The typical retail trader approach to things is looking for a signal. So you come in and you say, when conditions A, B, and C are met, then I will enter long at this price, and then I might also have exit conditions. Either I'm holding it for a certain amount of time, I'm holding it for a certain amount of profit, or I get some sort of counter signal that tells me that I need to get out. This is the way that the majority of retail trading works. And I have found that that is not really a very effective way to trade. I mean, if you're programming something, that's kind of like the basic way that you kind of have to approach it, I suppose. But the problem is that if there's some sort of like setup, like specific set of conditions that really works that well, there's going to be some robot that's already taken out of the market. So it's just extremely difficult to find any kind of a setup like that actually works. So what do I do instead? My approach is I'm looking for a certain market state. Basically, I want to take a trade when a large meta order is being executed, when there's a large imbalance in the future orders, essentially. And so what I'm doing is I'm looking at, instead of saying when A, B, and C, instead I'm saying, okay, here is factor A. How much autocorrelation is there in cumulative delta? Et cetera, right? Oh, by the way, I never turned the robot on. I was looking at the chart and I was going to circle it and it wasn't on there. So I'm looking for autocorrelation and cumulative delta, right? And how much autocorrelation there is one factor. Okay. That the more autocorrelation there is, the increased probability that market condition that I'm looking for is happening. I'm looking at all of the flows that I can predict that can be coming through that day and adding things together to see if there's going to be an imbalance, right? And then all of the things that say I'm seeing that flow right now. And I'm taking all of those factors together and adding it up into, is there a probability that this condition is happening? And there's a certain threshold at which I am certain enough that condition does exist and I take a trade. Does that make sense? So that could still be mechanical, but it's a more sophisticated way of triggering into a trade. Instead of looking for a set of conditions that are met, I'm looking at individual indications and adding them all together to determine some probability of a certain market state existing. Does that make sense? But so that's kind of like the way that I would think about developing a strategy. Then the next thing is like, what is like the key insight, right? The key insight is that you have to predict future orders. So when we're looking at the order flow and things like that, that's primarily to, one, see if the flows are matching our predictions, and two, to kind of learn how the flows actually end up coming out, right? You're building up that kind of intuition about how the markets react to certain kinds of things. I'm not looking at it because I think that there's a particular setup that I'm looking for that's going to put me into a trade. But the key insight is you have to predict future orders. So you're going to look for any kind of information that is effective at predicting future orders. Like the time of month can predict future orders in certain instances. You're more likely to buy on the first and last day of the month in treasuries. You're more likely to buy overall on the day after a treasury auction. Things like that, right? There's going to be more order activity on days with news than on days without news, right? These are things that can predict future orders. I add them all together to see if there's an imbalance, and then if there is, and I have enough support in the market data that I'm saying to say that my theory is correct, certain good enough probability that my theory is correct, then I take a trade. How did you get into trading at all? Well, because I started watching things during the financial crisis. I was really, what it was is I was into politics from arguing with people online. And I realized right away that the financial crisis was going to be a significant thing. And when I started doing that, I realized that I loved that more than the politics. And so I got into that. I started working at a bank and all this sort of stuff. If a large meta order comes in, wouldn't a larger meta order the other way? Yeah, that's absolutely what will happen. If I take a trade, I think that there's going to be a large meta order long, and then somebody else comes in and they have like an even larger meta order short. Yeah, that will absolutely screw up your trade. And so that's where you have to be, even once you're into the trade, you have to be looking at the data and saying, okay, Like, are the flows still in line with my thesis that there is a large meta order long that's creating an imbalance in market orders hitting in long? And sometimes there are flows that you don't know about that come in and will destroy that thesis. Yeah. And that, like, so how do you solve that problem? Well, one is that you just have to know the flows as well as you can, right? There is one situation here in the treasuries in particular that's going to give you a problem that you can't necessarily really do anything about, and that's where you really have to be locked in and watching the flows so that when this starts to happen, you realize that it's happening and you get out. But that is when a sovereign wealth fund comes in and makes some sort of a move, because we don't really get a whole lot of information that will help us predict what the sovereign wealth funds are going to do. So that's kind of the hardest one. I would say though that when they start doing things, they tend to be around for a while. So maybe you make it back the next day. There is no retail platform, even if a bot is executing the trade fast enough to execute trades to take advantage of arbitrage trades, at least not consistent. I completely disagree with that. The thing is, there's a lot of different arbitrage opportunities, and some are going to be more competitive than others. Okay. So if you are trying to arbitrage between the 2-year treasury and the 10-year treasury or something like that, then you're absolutely right. You would have to have the fastest systems in order to catch that, and you're not going to be very competitive with that. So that's an opportunity that's probably going to be closed to you. But there's plenty of crypto platforms out there. There are plenty of options. One of the things with options is that there's such a wide world of options, and there's so many different ways that you can pull off an arbitrage, that arbitrage opportunities do exist. There are opportunities for doing arbitrage in betting markets. That's another one. So if you are a retail trader and you're really getting into algorithmic trading and you want to do arbitrage, which is probably one of the good places to start, because that's a well-known strategy and would be a consistent strategy, right? There are places that you can find where if you are running a bot and you get a co-located server, there's places that will give you a server in Chicago. You can find opportunities. Just you won't be able to get you all opportunities, right? But there are arbitrage opportunities that exist. And more broadly, I would also say that they are rare, but there are some arbitrage opportunities that exist that you can take advantage of discretionarily. Which is to say, the robots don't seem to be very good at dealing with a situation where they're doing an arbitrage between multiple different instruments, right? Like if I come in here in the 10-year treasury, well, what is it correlated to? What am I going to arbitrage between? And I might do an arbitrage between different parts of the yield curve. I might do arbitrage between the Japanese yen. You might do, I don't know if you would call it, the reason I was pausing is like, I don't know if you would call this arbitrage, but you might be trading the treasuries long and the equities short. You might be taking trades between equities and treasuries or something like that, right? And the robots aren't very good at being able to sort out, there's all of these different correlations and one of them comes out of line, and when might that be? Essentially, like which correlation matters in this situation? essentially. And so, especially in really small illiquid markets, it might be like some currency that you never heard of before, or some market in Asia, or a stock market in a developing country. There can be situations where discretion, you can kind of take advantage of that. Certainly, though, it would be very difficult. Probably, yeah, you could trade between the calendar spreads. That might be a good one. It would certainly be difficult. It would be a lot harder than just macro trading. Have you noticed consistent S? I'm not sure what SWF stands for. SWF participation quirks, buying tells favoring reopenings, etc. I would say, oh, sovereign wealth fund quirks. Yeah, no. I think that the thing with sovereign wealth funds is we will see a flow that is just like a freight train. They're always catch us by surprise. Like it's always, man, this is just a crazy trend day, and I wasn't expecting that at all. Why would we have a crazy trend day now? And it's just that these sovereign wealth funds, they're so big that basically they have to be extremely unpredictable. Because if anybody in the market knew that that's what they were doing, everybody would front run that. So they're very tricky. But there is the one thing, like I was kind of alluding to earlier, if I get one of those flows, like we came in and things bought really, really hard today, and it was just a really consistent flow all day, and it doesn't really make sense, then I'm immediately thinking sovereign wealth fund, and I'm immediately thinking they're probably going to buy tomorrow too. So that's the thing with them. Perhaps we could go and take the information. There is a report that comes out like 2 months after the fact that kind of says how much money certain sovereign wealth funds are picking up and things like that. And perhaps we could combine that with information about their currency and yada, yada, yada to maybe make some predictions. Maybe there's some research that we can read about that. I've never tried searching for research about that. Let's ask ChatGPT. Is there any research that can help us predict what sovereign wealth funds will do in the Treasury futures markets? Let's say it will help us predict what sovereign wealth fund, help us predict sovereign wealth fund order flows in. Is there any research that can help us predict sovereign wealth fund order flows in the Treasury futures markets? Question mark. Think of SWF money as, sovereign wealth fund. Yeah. As slow moving freight trains, you won't front run the first locomotive, but you can keep off the tracks once the horn sounds. Yeah. Oh, okay, that's interesting. There is no single paper that directly and reliably predicts sovereign wealth fund order flow, SWF, order flow in Treasury futures markets, but several types of research and data sets can help build a framework for estimating when and why sovereign wealth funds might be active. Here's a breakdown of useful angles. IMF, HOFR, and TIC data. The currency composition of foreign exchange reserves tracks the holdings of foreign reserves, including treasuries by central banks, some of which are sovereign wealth fund-like. The U.S. Treasury International Capital data shows purchases and sales of long-term U.S. securities by foreign official institutions. That's true. Well, while these are lagged and do not separate sovereign wealth funds cleanly from central banks, sudden changes or trends can be suggestive of sovereign wealth fund relocations. Academic work on sovereign wealth fund behavior. That's what we would really like to see. The investment strategies of sovereign wealth funds. Yes, please. The rise of sovereign wealth funds definition, organization, and governance. These can give insight into SWF behavior patterns, including their tendency to rebalance portfolios quarterly or semi-annually, shift allocations during volatility or macro shifts. This can be used to create calendar-based models or trigger-based alerts, e.g. oil price shocks, central bank moves, etc. Yes. Oil exporters and FX reserve-driven flows. Many sovereign wealth funds are funded by oil exports, and their flows often correlate with crude oil prices, USD strength, changes in fiscal break-even oil price estimates for countries like Norway, Saudi Arabia, etc. By tracking energy prices and currency reserves. You know what? I've always had a hard time sorting out the correlations. Is the bot on? You know what? I turned it on, but it looks like it crashed trying to start. Ninja Trader's been having problems today. I don't know what the deal is. It looks to me, though, that it would have taken a trade long and it would still be sitting in it at break even, so. I've always had a hard time sorting out. I know that there's correlations between treasuries and oil, but I always had a hard time sorting out when that mattered and how. And maybe that just gave me a framework to understand that one of the biggest flows that you get into the treasuries because of changes in oil come from sovereign wealth funds. And that might help me understand it better. So that's something that I should pay attention to. I'm running a deep research query on your prompt now. Are you the one that ran the deep research prompt yesterday? That was somebody else. Who was that? AWIV. Oh no, it was you. That was interesting. Just like how much stuff it pulled out. What is deep research? So deep research is basically you give an artificial intelligence a prompt and it starts, instead of just like, I'm going to spend a certain amount of time and come up with the best answer with this certain length, it basically starts going through this whole thought process and organization to write a big long report. And it keeps asking more and more questions and keeps searching more and more until you get like a full on. So when deep research came out, people were kind of like, oh man, the consulting companies out there that like are business consultants are absolutely screwed, because now you can just have deep research do that for you. I think that that's probably the case. Although they would probably need to be trained more, but with enough reinforcement learning, that those would get really, really, really good. So you do a deep research report. Here, I'll pull it up here. And ChatGPT writes this big, huge thing. Like, look at how long this is. And down at the bottom, they cite a bunch of different studies and stuff that you can read. So if you want to know something about a particular subject, it'll really give you, and then you can go and read those studies and stuff. So like this one, investigation of martingale behavior in intraday futures and signal predictability. Trader takeaway, intraday prices for major futures, e.g. E-mini S&P 500, are nearly random or martingale-like most of the time, but fleeting inefficiencies exist. Exploiting them requires high-frequency tools. Order flow signals offer a stronger edge than traditional candlestick chart patterns in short-term trading. Verdict on martingale hypothesis largely holds intraday. Price changes pass many randomness tests, though slight serial dependencies on order flow effects emerge in micro horizons. Signal comparison order flow-based signals decisively outperform candlestick patterns in predictive power. Candlestick patterns show minimal statistical significance and virtually no economic profit after transaction costs, whereas order flow imbalances consistently anticipate short-term price moves, a bit with rapid decay and requiring low latency execution. Yes. So this is a really key thing, a kind of caveat that we didn't discuss yesterday, but that the AI picked up on that's important to know, that the edges that you can take advantage of explicitly in order flow, like the sort of thing that's like a signal, I see this and I know that a certain thing is going to happen. Those exist in order flow, but you've got to be fast. You've got to be fast. So we kind of have to use order flow more as tea leaves to kind of confirm or deny our larger macro thesis instead. Still, pretty good report. Backed up everything that we were saying. Pretty cool. So, could it do deep research on sovereign wealth funds? That would be good. As I'm reading this though, so the next thing, going back to the one that we were reading before, number 4, Treasury futures markets microstructure studies. Some hedge funds and research firms have done work on flow detection in Treasury futures. While not public, there is academic research on market microstructure that might be helpful. High-frequency trading and the new market makers, algorithmic trading in the market for liquidity. I don't think that those are actually what you want. But perhaps instead of saying, instead of the prompt being, for deep research at least, instead of the prompt being, is there information that can help us predict order flows from sovereign wealth funds and treasury futures? We could say, what are some possible predictors of order flow in futures? And then we could list out some that we want it explicitly to research about. And then we want it to come up with some theories about other ones that we have maybe missed that we could look at. Right? And then that might give us a bunch of studies. Yeah. You know what, though? You know what you should really send deep research on? Index spread trading and spread trading. Now, what I would do, here's a couple of them. That I think if we're going to do deep research, like what are the best deep research questions that we could give it? Right, instead of just like, here's our current question. I think that there's two things. One would be predictors of order flow / short-term signals in index futures. Equity index futures. Because what I've generally found is that there's so much going on in equity indexes that it's hard to find anything that's really significantly predictive of what it's going to do at any given time. Which is not true of the treasuries. And the treasuries, they tend to like just pick a direction that day and go that day, because the transactions that happen in them are so big that it takes them all day to transact them. Okay. Number 2 would be anything that would help us reduce adverse excursion in a position. Basically, is there some situations where I can say that if I take a trade here, I will get less adverse excursion than when I take a trade here? Because I've often found such things where I can predict that it's going to go and all of that. And the problem always ends up being that there's enough volatility to make the trade too hard to hold on to. So if you can time the trade in a way that would reduce your adverse excursion, that would be extremely valuable. And I keep doing a ton of research and back testing and everything to try and find a setup that like reduces adverse excursion in a position, and I can't find anything that actually works on that. So yeah. Asking about the arrive rate, aka event that will cause the order flow volume. Well, there is stuff about like arrival rates actually. Yeah, time varying arrival rates of informed and uninformed trades. There's this whole thing that's like really you want to look at like Hawk's processes. Hawk's processes where they can kind of say like there actually is like a certain arrival rate, but it's clustered. Like they'll happen here. And there's kind of these points where, you know, like if it's waited long enough, you get a really high probability of an order hitting, essentially. And there's models with Hawk's processes that do this, that can help market makers anticipate orders and react accordingly. But that still ends up being like a really high frequency trading kind of a thing. Well, they talk about it in Trades, Quotes, and Prices. Financial markets under the microscope. I'm telling you, if you really want to get into the research, read Trades, Quotes, and Prices, Financial Markets Under the Microscope first. Because that basically is a summary of all of the most significant research of the last 40 years. And from there, you have enough context to understand new studies and understand like what questions to ask and stuff. What kind of language to use and so forth that will prompt the AI to really give you good information. Are you going to go long there? Don't know if, oh, you know what? Because my platform is essentially frozen. I really want to shut down. No, don't want to save the workspace. I'm going to wait 10 seconds. What I really need to do is utilize advanced voice mode on the stream and see how that goes. That might be interesting. I was looking at it yesterday, and I think it turned out that free users, you can use it for a brief period sometimes. Premium users get like 15 minutes, I think. 15 minutes a day. And then pro users, it's unlimited. But pro users is like $200 a month. So I don't think we can justify that. WD Ganzo. I mean, anything that involves just purely price, I'm hyper skeptical that it's going to show anything. And this is a guy from a long time ago. Gann Angles. Oh, man. Is there any research supporting the ideas of W.D. Gann and his teachings on the confluence of price and time as credible predictors? There is no rigorous, peer-reviewed academic research that validates W.D. Gann's methods, especially his idea of price-time confluence, e.g. the square of 9, Gann angles, or time cycles, as statistically reliable or predictive in modern markets. While Gann's work is widely followed in some trading circles, it is generally regarded by academics and professionals in quantitative finance as unfounded or pseudoscientific. You know what? We should just do this from now on. Next time that you're thinking about recommending some sort of trading strategy or book or you know, some guru's ideas online, ask ChatGPT about them first, and ask ChatGPT if there's any academic research supporting them before you tell me. And basically what will happen is ChatGPT will say it's pseudoscience, and then you won't bother me with useless information. Okay, looks like NinjaTrader has started back up again. Let's see if we can enable our strategy and get it to pop up here correctly. What kind of worried that something got corrupted or something, because it's like not pulling up. But how do I find, well, but you can't, you're not going to find a system. That's the whole thing. You're not going to find a system. There was a system that worked. It was out there. People trading it would destroy the system. If you find a system, like a real system that like really truly works, don't share it, please. Keep it to yourself. Or just tell me, but don't tell anybody else, okay? You are going to have to come up with your own system. The whole idea here is we're teaching people to fish instead of giving them fish. Actually, I think it's kind of more complicated than that. It's like instead of giving you a fishing rod, I'm teaching you how to make your own fishing rod. Or instead of giving you a fishing, it's probably a better analogy would be instead of giving you a fishing lure, I'm teaching you how to make your own fishing lures. Because if you use the same fishing lure that everybody else uses, the fish have already figured it out that that's a lure that they shouldn't eat, and so it doesn't work. Right? Imagine that fish were intelligent and talked to each other. Then they would say, well, the other day, Bill, he saw one of these things, and that was a human's fishing hook, and he got pulled out, and he's gone now. Right? They talk to each other. Now they all know to not go for a lure that looks like that. And they're all going to talk about which things are actually bugs and which are lures, right? How would you, as a fisherman, deal with that situation? You'd have to use a different lure from everybody else. People have been accurately predicting human behavior since recorded history. Humans are placing orders and that behavior can be predicted. Maybe. I think that that's what we're trying to do. But the idea that their human behavior can be predicted from their past actions in the price is a questionable pseudoscientific claim. Are you aware of 6502 Prince of Persia stuff? No, what's that? .6502 assembly language is what the Prince of Persia was originally written in? Oh, that's interesting. Why would you ask me about that? I mean, I've done x86 assembly before. I've done calculator assembly before. I don't remember anything about it. We've got about 7 minutes left and then got to get going. I wish you guys the best of luck with the whole UK trade agreement thing. You are near, don't stop there. He released the original source code. That's cool. Okay, let's see here. What did you post in the premium Discord? I appreciate it, man. I ran a deep research on people making a living in the music industry back before the digital age versus now. Once I was done, I had Claude create an interactive artifact using all of the research to make it easier to digest. Even though total US recorded music revenue hit an all-time high in 2023, fewer people can actually earn a living wage from that revenue, particularly among songwriters. This is because the revenue is now split across tens of millions of tracks and creators. Now, they're saying that it used to be, if you looked at the distribution of people that make money, it used to be kind of like this, and now it's kind of like it's so wide. And if this is the level of people that are actually making money, they've this is actually an example of like what did they do? They shared the wealth. What does that do? It makes everybody poor. I'm kind of skeptical about that finding, though. That kind of sounds to me like the excuse that the music industry makes. Man, I'm really frustrated that Ninja Trader is not starting my strategy. I say 100% excuse, maybe. You want to listen to a song before we go? I know which song I was working on that I thought was really good. It has samples in it that would like trigger the things, so I probably shouldn't give that one to you. Yeah, I can go and see what we got. Is your tape in its place? I don't know what you mean by that. See, just... This is the one that I've been the most obsessed with. Tape read that before it executes. Okay. Well, the robot's not going to take any trades. It looks like we had a big move up to 15, but that we've come back to 10. The chart's not showing it, but. Taking longer than usual to load the plugins, I feel. Always with the updates. This might be really loud. Yeah, that's way too loud. Oh, no, that's not going to work. That's not going to work. How did I do this before? How did I do this before? Yeah, it's not outputting to the stream. I would probably have to change it as the virtual input.
So we do have the video out on the feed for AI CEOs testifying in the Senate. It isn't a YouTube video. If we do find one, we'll pop it out. So 5 minutes away from the Bank of Canada Financial Stability Report, US wholesale inventories month-on-month revised, forecast 0.5% unchanged from the prior. US wholesale sales inventories month-on-month.
I think that when I did it before, that I was I had it recorded and I was playing it back.
US and UK trade deal press
conference
now you're hearing
financial juice. That's funny. Like, I don't know if this will work. If I do the aux, will it? Okay. Oh, but that's the wrong one. I think it's that one. No. It must be the insert virtual. Maybe. No. That one doesn't even show up. Oh, that's so interesting. Wait. So I was hearing it through this one. It should be coming out this one, but it's not. Oh, well. I'll have to, like, record it and pull it out. Nah. I got this breakdown that I think is so sick. No. Don't save the changes. But it's time for me to get going. Oh, all I did was turn myself down there with the microphone. I was meant to turn this one down. That's okay. And it didn't work. I have to record. I'll have to, like, output it and then just play it and then do it that way. They sure came back there. My algo is still, like, broken. So I guess I can close things down today. That's what I'll do. Shut it down.
Pakistan government says Prime Minister receives
That
telephone
will
call from U.S. Secretary of State Rubio.
keep the room cooler. All right, guys. Yeah, it's a weird way to end the stream, but thanks for the research things. We'll take a look at those. I will see you guys tomorrow. Stay excellent, team.